Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, October 18th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES, still inside that developing narrow range. It is now a 7-day narrow range here, which can be quantified down here. 55% of average, only 89.75 points of range over that 7-day span here. Obviously today still a developing day, but it's precisely at the middle of this range with a shot to go to the top or the bottom and then back in again as we continue to build out. We have a Fed heavy schedule today. Pre-market building permits, housing starts, also crude oil inventories today. Fed Waller speaks, FOMC member Williams, and Beige Book later on at 1 o'clock p.m. Central. Perhaps the biggest item of the week here, still Fed Chair Powell speaking, 11 a.m. Central Thursday, which could be a big market moving event out of this range. Until then, we could be range bound until proven otherwise, fade the edges, and avoid the chop in the middle. We take a look here at the NQ. Similar price action, a little bit wider of a range, but still compressed. 62% of average, just 418 points of range in that range. Again, still compressing, still chopping back and forth. We're right at the middle of the previous session's range. We could easily come up here to the upper end of the range and fall back in. We could easily drop to the low end of the range and rally back up. And again, it could be back and forth, very similar to what we've seen here over the last week of trading. Eventually, a breakout from this range could trigger the next 8 to 900 point move. You can see it happened here recently where we had this range and then exploded for a 125% measurement down here, back up, here, back up. So these types of moves is exactly what we're expecting here ahead. 750 to 850 points of range could be seen once we do get that expansion. If we fail through 15K, for example, there could be a drop back toward 14K to 14.2. That would be the downside measurement, especially given the downtrending price action. So we'll keep an eye on this range until proven otherwise. Watching crude oil, this one's up 1.65% right now. Up 1.65% here. Appears as though the chart itself here has a developing failed new high back into the range here. After this big squeeze and a 2-day hold, failed new low the previous session nearly led to an outside day up, but did not, and instead failed new high here and back down within the 3-day developing narrow range. We go overall, this market here holding at the 88, 89 level. 88 is right here, 89 a little bit above it, and that's kind of this middle zone here between the upper market structure and this lower. If we're going to reject here, this could be an indication we drop back toward the 82s up ahead. If we can push through 88, 89, it opens up the upper half of the range here into 94, 95. So right now, watching this very closely here. Again, a strong early rejection to begin the day, really happening in the 4 o'clock hour Central Time, and now watching for this thing to approach the other end of the previous session's range, which could lead to a bounce back up as it develops a narrow 3-day range. But failed new high at 88 could lead to as much weakness as 82 down below, especially if 85s are taken out. Now let's take a look here at gold futures. Gold has made a beeline to the upside, big time rally here. This huge 3+% day really opened things up back above the 1900 market structure level, and at the time I mentioned that opens up 1950 and 2000 up above. Those are the next two levels. 1950 hit now today. That is kind of right here where prices went offered away from that level, found a rejection and a snack back to that level. The FOMC key levels above 1967s. That level likely to be hit very soon here as well. And then you look for a continuation into 2000 above. This market very, very bullish right now, so you do not want to fade into this strength just yet. Instead, You want to watch for rejection at some point here once it gets to the upper end of the range. We have seen various styles of rejection here up above the 1970, 1980, 2000 levels here. So as we continue to push higher within this range, we will likely meet an edge here very soon, and at that point we'll watch to see if a rejection develops, which could snap back prices into the 1900 level below, as it now trades somewhere in this zone. So watching this area very closely here ahead, but very, very strong today. Looking lastly here at the YM. YM here really got outside of its range. It still has a narrow 7-day developing range here, but you can see a little bit more sloped. The low way down here, the high way up here, so not the most narrow range. 61% of average for the current volatility. But still, if we're going to see some action out of this range here ahead, there could be at least 1,000 points of range, maybe even higher, 1,300 points on a 7-day developing basis. Which way do we see that unwind? Do we see it continue to the top of this quarterly range? Remember, rejection here, holding this level here, all of that bodes well for a continuation higher. We were looking initially for this thing to rally back toward the midpoint of the quarterly range. That's 34.7 here. Can it get back to 34.7 as a short-term target up above? If not, again, failure here back at 33.750, the previous close, could begin to open up another round of weakness ahead. But the fact that we have the initial check mark portion of the quarterly move developing means the pullbacks here could still be defended as this thing tries for higher pricing. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.